So, Jeff, what do you make of this movement in the futures? We're well off of our highs of earlier, also seeing the Dow kind of fluctuate between positive and negative.
Well, it's fascinating to see. We're looking for 4 days in a row. The last 3 days in the S&P 500, Frank, we've had consecutive 1.5% or more gains. We haven't seen a fourth consecutive day going all the way back to 1982 when E.T. was being released in the box office. So I think there's a lot of momentum, but there's also a lot of shorts and underinvested. We saw a wild washout in the month of April. So I think right here, right now, with the VIX coming down back under 26, 27, I think there's an absolute opportunity for us to move higher, kind of to where we were before the rose garden bed bottom, whatever we want to call it.
Well, you're just making up the are you talking about the tariffs? Okay. I like the rose garden bed, but I didn't even know where you were going with that one, Jeff.
I got coffee in me this morning, Frank. I'm ready to rock, pal.
I always believe that you're ready to rock. While we're just talking right now, why don't we get to your word of the day? And we got a lot of stuff to talk to you about this morning.
Amplified. I think my word of the day is amplified due to the fact every move we're seeing investors, market moves as well as sentiment has been amplified due to the trade tariffs. There's been so much emotion injected in the marketplace. I've seen every move, even today, overnight futures, being amplified.
All right, so you see that amplified. J.P. Morgan, Dubrovko Latkos came out with a note overnight. I want to bounce this off of you and see what you think. Here's what he says in part. Obviously, we can't read you the whole note. The sentiment is very bearish right now, especially within the macro community. Most are disregarding the latest trade developments, in part due to, quote unquote, what he calls Trump exhaustion. We observe that many prefer to stay in cash and maintain lower leverage in their books. What do you think about this? Whether that cash is short-term bonds or money markets, what do you think about the fact that there's so much money potentially on the sidelines? What does that mean for the direction of the market going forward?
Well, Frank, I'm not a contrarian, but the fact that we've seen so much money deleverage, so many hedge funds deleverage, when you talk about NVIDIA, which was the darling of all stocks in 23 and 24, being owned by over 500 different ETFs, now that you've seen the Mag 7 valuation, or concentration, I should say, in the top 10 of the S&P 500. Now that you've seen it revalued, I think there's an opportunity for the market to move higher. I'm not saying it's going to be a straight line higher, but there is, in my opinion, it was overdone to the downside. We priced in the worst case scenarios.
All right. How do you also look at Staples having a bad week this week? Staples down about 1% this week. They're actually the only sector in the negative. And then you look at some big names. Kimberly-Clark and Procter & Gamble, worst week since 2022. Pepsi and Church & Dwight, worst week since 2023. What does that tell you about sentiment?
Well, I actually think when you see this dispersion in sectors, look at financials this week, one of the best week we've seen in financials. When you see sector dispersion to the extent we have in the month of April, which has been wild and historic, I think that actually signals a bottoming component, because when you see people continue to rotate, we've talked about this rotation a lot here on Worldwide Exchange, due to the fact that investors are repositioning, rebalancing. So I actually take that as a positive, because there is still strength in the consumer data. We've seen that recently, Frank, but I think there's an interesting component going on with this sector dispersion.
You know what else you're seeing as a positive, Jeff? And you're going to have to explain this to me and the whole audience. The moves in one commodity, copper. You say the moves we're seeing in copper are actually good for the equity market. What's the connection?
Well, it's been a bellwether for a long time. We call it Dr. Copper here in Chicago. But when you see copper, when we saw right after the trade tariffs were announced, whatever that cardboard with whatever Ouija board was used to concoct those tariff numbers, we are actually seeing Dr. Copper, which wanted to trade under $4, come back up to $5. Dr. Copper has always been a good bellwether to tell us demand, specifically out of China.
All right, by the way, you also call it deep dish pizza there in Chicago. It's not pizza, but we're going to move on past that one, Jeff. Why don't we get to your pick? What's your pick for today and why?
Well, I think you have to look what's been oversold, what's been washed out. Obviously, we've seen a revaluation of the Mag 7, but I want to take a step further, going to a subsector, and it's Micron. Micron is in the semiconductor chips. You've seen semis, look at SMH. It certainly has had a falling out. But when you look in the last 1 year, Micron has been sold twice as hard, down almost 50%. And when you talk about the AI theme being rejuvenated, you're going to see Micron, which is the leader in memory chips, and also, Frank, made here in the U.S. It's fabricated in Boise, Idaho, as well as Virginia, and they're actually building a $100 billion mega fab in New York. So the fact that they make it special treatment due to the fact that they're here making the memory chips in the United States, that's why I want to own Micron. It looks like it's going to go test its 50-day moving average about $10 higher at 87.
Just really quick question, Jeff, and we got to go after this. They do memory and storage. Is that the best way to play this in your mind?
I think when you see an oversold, exaggerated, or amplified move in Micron, you can play that mean reversion in a name like Micron to catch up as you see the Mag 7 potentially come back to life here in Q2.